All right, ladies and gentlemen, I hope you're having a wonderful evening. You thought you were in the stock market the whole time, but you're actually in a Psychology 101 class because all of a sudden, everybody feels amazing. All of a sudden,
Oh, hi.
everybody
that's me.
feels
Because
amazing. And you have hit a new high since the Liberation Day lows. So we got a lot to talk about. Wall Street is now gone and flip-flopped. They're liking it, and today was a pretty wild rally for many reasons that we are going to talk about. But like I'm telling you, you've already gone through the uncomfortability and some other things. We're going to talk about the broader scope, but we've danced at these levels, but we're finally breaking out. And once again, as you start to move up and hit a high, the conversation starts to change and people are feeling a certain way. But we were talking about this box, and today was the first sign. So we'll see what happens by the end of the week. We got a lot of trade deals on the way. And then we have hard data on Friday. If all is well, you might be able to get out of the box, but you know what's happening next. You know it's going to, I'm telling you, oh, you're going to love it. So Chad, we got a lot to talk about. I got a lot of pretty pictures. I have the evidence. I have the receipts. I didn't come empty-handed. Don't worry, baby. And I got some plays. We're going to talk about it all. I hope you brought yourself. I hope you brought your spirit. I hope you brought some heart. Oh, I don't let me get you too hyped, though. You got to go to bed after this. Some of you are probably in bed right now. That's good if you are. If you at work, keep grinding, baby. What up? How you feeling, baby? Good evening. What up, Tyree? What up, Johnny B. Good? Mosby, Enrico, Anthony, Shih Tzu, Dos Nacho. What up, Rick? How you doing, Mr. Stallings? Oh, good evening, baby. What up, Moondog? Jacobin, Mr. Forrest Gump. Oh, the Forbes, Coron, Grumpy, Michael, J. Sauce, Connor. What up, D? Dystopian, Mr. Browning. What up, Zilraj? Good evening, baby. El Trapado, Stephen Chang, Mr. Edwards, the Forbes, Samuels, Godzo, Tim Whitman. Oh, good evening. So, Chad, I hope you're doing good. I hope I don't get a poop attack, but we should be good. The watchlists have been quick, but we'll see. We'll see what we get popping here on this Tuesday with new highs. Your long-term hit a new all-time high. I know the market don't need to hit a high. Oh, stop playing with me, but right off the bat, I'll show you guys the pretty pictures afterwards, but, oh, that's a horn. Yeah, woo! But let's talk about it. Wall Street has quietly bought back in. Again, I've showed you some charts. It'll make a lot more sense here, but we were talking about it all. I don't know if it all happened today, but it really seems like the last couple of days, some of these weird melt-ups and how it played out, you're seeing people feel pretty optimistic, even though we are just coming off of a bunch of different trade deals and watching uncertainty rise. People are feeling a lot better, and it's a mix of momentum, seasonality, and a lot of different factors, but there's still some people holding back, but the tide is slowly turning. Now, I should have highlighted this, but let's see how long this lasts, because this is the same Wall Street that is in and out and very finicky. Their average turnover time is less than 30 days. So I wouldn't really bank on this too long. There was good data. That kind of helped. But the thing about today, which made it even more interesting, it was a lot of small caps. The Russell led, and it didn't really involve the Mag 7 or Staples. Tesla was up for a little bit, and then it faded. It was really just NVIDIA and the chips, but it was a pretty interesting dynamic, and it really broadened out. So we'll see how long this lasts. Like I told you guys in the beginning here, we have a couple of different events this week. We'll see by the end of the non-farms if this really lasts in all of these trade deals. If we get out of the box, again, the next level, it's now the low end. And then, yeah, before you know it, Wall Street is getting back in quietly, and people are going to be talking about all-time highs soon. But that leads to the next point here. I'm going to start with the ending of it all, but we talked about it here to start off the week. Remember, breakout or breakdown. I've been telling you Wall Street is banging on the table, and now we're moving towards the high end of the range. If everything goes well, they get the breakout. A lot of people have been looking for this. Otherwise, if it doesn't work, things get bad as a result of trade or jobs or other things. Maybe you go and you hit the high, and then we start going down 300 points again, and that's why uncertainty is up. Either way, the bad part is that you are in the middle of two extremes. And my child, the logic is the same here, unfortunately. I really hope you guys all understand this, because 2 months ago, literally 60 days ago. Like, you couldn't even have had a child, okay? Like, you know how I give you that example of like 9 months ago? It's been 6 months since the beginning of the year. But yeah, bro, it's been 2 months since mother effers were like, I don't want America! Literally, I can make so many jokes once again, but just straight up, like, dude, that was 60 days ago. And then it was a month of straight rallying. And then that's what I was saying. It got uncomfortable a little bit at the beginning, but now you spent like 2 weeks kind of dancing, getting used to it. People complained, people got bullish, people positioned, people covered. Some people remained under position. There was a lot going on there, and you saw how he danced around. It's not as uncomfortable, but it's still the same thing. But you've seen this all, and like I'm telling you, the thing that sucks is that you got to wait, and nothing has really changed. 2 months ago, that was the extreme low. And like I was telling you, I was like, well, yeah, we'll buy. I wanted to hold cash, but, you're going to give me 20, 30, 40% off. We might as well buy it, even throw down a little bit. That's fine. But what happened? You bounce back up. And now I wouldn't buy it at the high, but nothing changed. Nothing changed at the low. Nothing changed at the high. There really has been a lot of information, but there hasn't been a structural shift yet. And that just means don't be too certain with all these moves. And now this is what we've kind of been talking about. Even if we break out, I think it is going to be very choppy. This is what I mean by like, bro, you know what's going to happen. You've lived this before many, many times over, even recently. Don't forget, learn from this. You start to break out, bonds are at the low. What's going to happen? Does it mean that the rally is going to stop? No, it's a game of musical chairs. Stocks could still keep climbing. Everybody feels good. And then all of a sudden, one of these mornings, one of these weekends, one of these headlines that you knew about or didn't know about, I don't care how it happens. Oh, my God, the interest rate is high. Wall Street, oh, my God, the interest rate. And then everyone's going to sell off all of a sudden, right when you buy calls. It'll be right before you buy calls. You'll fade everything, and then you'll buy calls, and then the next day that'll happen. Or what's going to happen? Right when it's going up, your all-time highs. You're like, okay, yeah. Donald Trump, I hate Trump. Oh, he's a taco. He's taco. And then do you get what I'm saying? So why go through that when you could just prepare and plan? The diligent man foresees danger. So, trade accordingly. And like I'm saying, you could ride the wave till then, but you know exactly what's going to happen. Every single issue is exactly the same. It's going to be whack-a-mole of what gives you your random pullbacks. And then meanwhile, everybody debates until, again, we get a structural shift. Believe me, I will be here. I'll be ready to tell you. But until then, nothing has really changed. And I honestly, dude, it's 6 months in. All I have done this year is sat. Yeah, I made a lot of trades. And, that's one thing. But, really look at the long term, bro. We have done two things. Nothing. We just sat there. Okay, we'll buy the really extreme dip. And then that's it. Because nothing has really changed. And even stocks are just getting pinned at certain levels. It's ridiculous. So until there's that structural shift, yeah, you're going to go between extremes and, yeah, get ready to play that. But Wall Street was looking for the breakout or breakdown. We're kind of getting it. I think it'll be met with the chop, and you know what to expect. So plan accordingly and enjoy it till then. But that is key number 2. And then finally, key number 3, bro, tomorrow. So tomorrow's the Wednesday. It's kind of crept up. And this is what started, whether it was Wall Street positioning or the news, whichever one you want to call it. But tomorrow is trade deals. That's where Trump said the deadline. They're trying to speed things up. If we're going to be hearing trade deals all June, this could be the start. So look for some announcements. If they move the needle, that'll be actionable stuff you could trade on. Not structural, but it'll give you a little bit. Otherwise, there might be some carrots or sticks to look forward to depending on the response that we get tomorrow. So other than that, though, I think it should be easy middle of the week, and we'll see where the data takes us. But now you're going to have to fight off between melt up, all-time highs. Why are we doing this? Has anything changed? Yibbity-bobbity-boo. And yeah, so it should be a fun time. Throw in a couple of earnings in between. But other than that now, let's go to the pretty pictures. So first, I'm going to just start with this because I posted this on Twitter, and I showed this today on stream because, I don't know what's going on Twitter with all the boomer hate. And like, listen, I'm not like a boomer advocate. The only thing I got is a receding hairline. That's it. So I'm technically not a boomer. I'm into like some boomer shit, and I got the hairline, but yeah, I'm like, listen, I'm just trying to be fair. I ain't like a boomer advocate. I don't got an AARP card. And at the same time, some of you little fucks on Twitter, what the fuck is wrong with you? I think you're not living in reality. You've been fucking jerking off and gooning too much. Yeah, I had to ban you. Yeah, literally. So here's the deal. Because I've been seeing people talk about real estate, and I showed some of the data today. And I forgot people have been talking about this. It's like literally there is a record amount of unsold inventory. So if you take the listing prices, it's $698 billion. Literally the most on record. Last 13 years, there has not been this dollar amount of homes listed available for sale ever. Again, there's more sellers than buyers. There's like 15 different charts. Houses, the percentage sitting for 60 days. And again, it's there. And again, I'm seeing a lot of boomer hate. And they're like, oh, the boomer bought his house $80,000. He said for two. I hate boomer. Boomer caused my problem. Millennial caused problem, but boomer problem. But so like, dude, this is a real deal. This is the one I got yelled at a week ago. I got yelled at by a seemingly reasonable adult male and the real estate agent because homeboy bought this house for $750,000 in March of 2022. And he, after, a couple years, like literally a year and a half, he's like, yeah, it's time to sell and make $100,000 profit. You guys, this isn't a boomer who bought his house. He bought this 2 years ago, 3 years ago. And then his house would not sell at the end of the year for $795. So a month later, he lowered it to $775. Real generous, right? Right? Like a real boomer, you would say. But again, he didn't buy his house for a paperclip. But long story short, he yelled, I think I offered $600. And I wanted to see if he'd be willing to talk, and he got mad. But other than that, yeah, I thought that was an interesting one. But now here's the real stuff I wanted to show you. You guys remember this. I gave you another chart literally as we were rallying. I was like, look, Prime Book and some of the other details with like liquidity and dealers, you were able to see that they were not buying. And yeah, well, guess what? They flipped. Even the short positioning. And now it was actually one of the biggest flips on record. So it's not everybody. There's still some holdouts on Wall Street. But long story short now, there is some flow data backing this idea that banks, Wall Street, institutions, they're getting on board. Even a little bit of the Treasury, too, to be honest with you. Go ask Besson about the bond buybacks. But that's an interesting one. And then this one, I love this chart. America! Oh, like America, over. It's over. Let's States America, over. I feel bad if any of your guys' like wives or significant others are listening and they're like, what are you listening to? This is real hard-hitting economics, ma'am. Okay? Forgive me. But here's the deal. This is why, because, dude, this is what we listen to. Like, I don't think you realize this is what we have to hear on a daily basis. Because the fact of the matter is, do you guys realize what this is? This is like EPS revisions. Do you know what the red line is? That's America. The non-red line that looks like a shade of feces is the world excluding the United States. So do you know what has happened in the process of all of this dramatics? And everyone, again, the end of America, buy Europe, buy, yeah. So, yeah, we went down for a little bit, but long story short, after all these earnings and everything, we're actually expected to grow the most for now. So, we'll see what yeah, and it was at the end of May. It was the first time, and then even starting off, you're getting some of the biggest purchases, or the first time America has emerged as like the net buyer in a while. So yeah, a lot of them did buy us, believe it or not. And so I have two more charts now. I'm going to save one of them, but here's the final one leading into June. This is where, again, like yesterday, the melt up, it's kind of odd because like people thought it was going to be a little more gloomy, and now, 48 hours later, you hit a new high, and, give it one more day, this week goes good, people, you're going to be hearing all-time highs. Well, you actually got seasonality on your side, believe it or not. So this is the last 10 years. And the 10, 11-year average, June, is usually positive. And people were saying, if May is bad or good, it really affects it. But like low key, bro, June is solid. Like usually the last time you had a red June was in 2022 and you went down 8.6. That was massive. Again, then that was during literally the other time we had volatility, and that was Powell and the inflation, right? So think about it. Unless inflation emerges in June, unless it shows up on the data or you have an economic freakout, I doubt you will replicate that. But other than that, June has been pretty good. And what the other one I have highlighted here is 2019, 18, 17, and 16. That's Donald Trump. So Donald Trump had one really good June, and that was when there was more volatility, a very, very volatile year. But other than that, his Junes were kind of a dud. So be on the lookout, because seasonality, I don't really trust it as of late. Anything could happen, and all this is just telling me, I'm just walking away with a warning of maybe we move up a lot, maybe we move down a lot, but like you might just do all of it to go nowhere in June. Otherwise, like I said, again, Chop City, slow summer, I'm ready, but like I wouldn't be surprised if we hit a new high, hit a new low, and then came right back here. That literally would not surprise me. Would it surprise you? So either way, I have a effing long-term hitting all-time high. So I don't know what to tell you. But other than that, I think it's going to be very, very interesting. And now I do have one more chart, but I will have to show you as we get into the plays. That was a weird one right off the bat. Broadcom, AVGO. Avago. You could pronounce it however you wish. That's up to you, brother. And I won't judge you, okay? Some of you will. Some of you I don't know why you take life so seriously, bro. Calm the fuck down. But sorry, that being said, I don't think I'm going to play it, but I will give you information. I will have a handy-dandy stock market preview for you. Actually, did I save that shit? I did save that shit. So I will have that for you. But other than that, people are saying it's the most important one of the week, believe it or not. So we've had a lot of things going on. You even had like Dollar General and a couple of other like pretty big reports so far in the last couple of days. But, people are kind of hyped on this. Remember, we're coming off of NVIDIA. Today was the chips and NVIDIA kind of leading, not the other Mag 7 and Staples. So we'll see. This could be a big dictator for like AI chips, Apple, and connected to all of it. So watch out for that. That's going to be an important one. But now here is your information. Oh, I should have put this up in the beginning. But yeah, here's the preview. So you could save it now. That way, if you ask me, it's on Thursday. But here's the thing I don't like about it. And this might be the opportunity. I'm not going to play it because everyone's turning into a crackhead. Everyone's going crazy. Again, I haven't really hit too many earnings during volatility. When I hit my volatility plays, my earnings plays don't hit. When we're not hitting volatility, earnings plays hit. But really, this earnings season, I feel like a lot of everything just got in the way. I haven't really been liking it as much, and some of them have just made really wild moves. We've seen high correlation. I mean, long story short, since the last quarter, Broadcom is up 42 effing %. What do you want me to do with it? So yeah, maybe it has a good or bad report, but there's a lot of room to move in there. And then it's only pricing in 7, but then this thing can move a lot. So either way, we'll see where that leads us, but I don't think I'm going to play it. Save this preview, or you could always come back to this video if you're going to need it. But that is play number 1. Watch out for that. And then play number 2. I did it. I said I was going to wait, but I did it. I had to do it. Everybody's doing it. You could call it peer pressure. But I did it a long time ago. Technically, I made this play over a decade ago. Low price. You'll make your money on the buy. I haven't sold it yet. Actually, here it is. The play. Silver. Wow, like you're hunting vampires. You know that any vampires, if you're here illegally, I'll deport you. I'll shoot you with silver. I'll do it. Anyways. Sorry, I need some water. Is that, what the fuck is that, thunder? Do you guys hear that? Anyways, I took the silver play. So I really believe the real play at some point in the next couple years, if silver's really going to have the breakout, there's going to be a major like fear knife, and that's when you buy it, and that's when it will go crazy. But like I told you guys yesterday, bro, that 35 price is big. And sure enough, bro, by the time I fucking woke up, mother effers are pumping that. And I'm telling you, I don't know, does Peter Schiff like silver? Who's the Peter Schiff of silver? I don't know who it is, but I bet you right now he's talking about 10 years, 15 years. It hasn't had this price. And people why are people going to get jumpy? We talked about this yesterday, but it's very simple, bro. Judas? Well, technically, yeah, 30 pieces, but, but like literally, man, people have already seen what happened with gold. So they're willing to take certain plays just on the back end barbell. But at the end of the day, though, people are getting jumpy. I think it's going to be a good swing trade at the very least. But like, I think there's going to, I'm not telling you to make multiple entries. I think that this trade will develop over the next couple of weeks and months, and it's going to go up and down. And like I'm saying, there's like a real play on the knife. There's like a squeeze hype play, and then we'll see. It's either going to be a dud or it now trails along gold. And this is what I'm telling you. This is why everybody's going to get fucking jumpy because of this right here. This is silver and gold. Like I'm telling you, going back, bro, the last time you hit $35, it was in 2011. So that's what, 14, 15 years ago? So it's again, people are hyping. They're saying it's the first time silver has went that high. Again, it happened around 2024, I believe. And it's not like this is there and that didn't break out. But now that it's doing it and gold is literally $500-$600, 26% higher. Since then, people, again, if it just closed the gap with gold, that would put it to the all-time high without any fear, just if it closed the gap with gold, if it just matched with price action. So that's where people are getting. Again, does that mean it's going to happen? No. This is where fucking gamblers are going to gamble. I gambled. I got time, like I'm saying, I think between now, August, September, there's going to be, it's either it happens or it doesn't. Either Wall Street's going to rob you or it's going to pop. You make it free and then it gets squeezy again. First time above 35, if it really breaks, we'll see how people are feeling about it. Other than that, it's silver. And yeah, there's a reason why it hasn't broke out. It is a commodity. So other than that, though, I took it. I do think, though, like I told you, before any other move, though, there will be a bigger knife in part of this process. So that, I think, will be the other opportunity when it is all said and done. So watch out for that. That is play number 2. And then finally, play number 3. Are you ready? I'm sorry. I'm apologizing already. I know. Pizza! I know it shows up again. I know. I didn't make a play on it today, but Sweet Greens, I have a play on that. Pizza, we made a lot of them free, and we have it in the long term. But watch Kava, watch Shake Shack, Jack in the Box, even Chipotle later in the day. But restaurants had a surprise performance today. They all kind of popped up out of nowhere. A lot of them are attending these consumer growth conferences. There's a TD Cowen one, a Berenstein one, and 2 others. So you might hear about these or you might see them move. And again, if they come out with good guides and hype things up, these are some good value plays, but they all started to move, all depending on, some are value, some aren't. And like I'm saying, you're watching laggers and leaders and pizza overtaking Domino's and Sweet Greens going from good to failing, putting people from Chipotle on board. Shake Shack's just low-key wings and Shake Shack. Some of those guys have just been killing for a long time, and Kava still holding the gains and in that spot. So there's a lot going on in this space. We'll see what happens. But yeah, even Wendy's, actually, people are mentioning that too, and that is getting brought up as well. So all of those, I would say, keep an eye on any sort of restaurant, see if this trend continues or not. Other than that, wait till the staples or Mag 7, and we'll see where the data and everything this week and the melt up leads us. And long live the long term. Amen. Amen. Can I get a 10% in the chat? 10%? Amen, 10%. That's how we say amen is amen, 10%. Amen. Amen. So yeah, long term. Any questions? I'm done with my prepared statements. Some of it was prepared, but most of it was prepared. I do add a little bit there, non-prepared, but technically that is my prepared statements. Do you have any questions for the Q&A? If you have any, I would love to partake in the Q&A. We could do that now. Here's the small account. One day I'll talk to my liberal sister, and then I'll log in to get you the other inspirational one. Or I got to turn my other computer on. Oil stocks, I'm not a big fan of, to be honest. Again, even if you drill, baby, drill. I don't know if that's going to fare well for all of them. Thunderstorm and SD, it sounds like it, bro. 10%, baby, of all you earned is yours to keep. Any words about Dollar Tree? I mean, all of these, we talked about them. We were saying as long as you didn't have too many staples or even with Target. But it's kind of crazy, though, right? Because I was looking at Dollar General. I was like, that would have been a great pickup at 72. But it's kind of where it was at the end of last year. So they're doing good. I mean, if you like these, but my problem is if you really I mean this in a non-condescending, patronizing way. But if you didn't want it at $74 like a month ago, why would you want it at $98? A lot of people have been asking me about stocks lately, and that's what I've been trying to, whether gently or by banning the shit out of them, I've been trying to encourage you all to kind of avoid that because that's a really emotional decision. If you're thinking for 10 years, you can always average into it and dollar cost, and things will always work out if you have a long-term horizon. But at the end of the day, I think you could be a little bit more strategic, and I would try to avoid the names that have made these crazy runs because it's not like much has changed with them, and there is other names that have not done that per se, and otherwise, I would be patient. That's the funny part because am I telling you not to buy things? Am I telling you that these are bad companies? Not really. Your portfolio will speak to you and all of that, but you have to wait till things get good, and that's it. You have to be patient. It takes time, and there's some names that haven't done that, and there is high quality names. So I think Dollar Tree, Dollar General, there was a time, and people with all the other consumer names, and I think that's where you get them. I think it'd be nice if they held up, but last thing you want is to buy the recovery stock and it fails. That's it. And that is the risk, to help educate you as an investor. You have to understand where this sentiment is coming from because some of these stocks, they have moved because they're moving with the industry and the market, right? But at the same time, some of these stocks are having recoveries. And they died because they really lost market share or they had really big individual problems. So some of them are doing good now because they're turning around and they're having a turnaround story. So that'd be nice. And if it turns around, awesome. But the risk of buying the turnaround story, if that shit fails, you just willingly took a 30-40% loss. And then you're going to be stuck in that for a lot longer of time. Usually leads to opportunity cost. So that's what, not really, sometimes it could be Walgreens, or other times it could be Starbucks, or other times it could be Nike, or Whirlpool is a great recent example. Whirlpool was one, we bought it, it went up literally, bro, in this year, in 2025, in the last 6 months at one point, bro, I was up 30-40% on Whirlpool. Did you know that? In this year, in 2025. So look, it's no longer up. I think it's down 20%. So we got long-terms all-time highs right now. Both of them, all of them. Both of them. And at the beginning of the year, I was up 40% on Whirlpool. And I said, don't buy it. Now I'm down 20 on it. That's a 60% change. Oh, man. So, yeah, that's what you got to watch out for. And that's what I'm saying. It's just that is the failure of all of it. And, yes, on the reverse, what I just said doesn't mean buy shitty stocks now only going down. That's what I'm saying. This is why I keep saying Pepsi, because Pepsi is just this sweet, sweet mix of it was going up, doing good. It's it came down. It's pull this thing out. It's leveling out. It's not fully going down, but, still kind of reasonable. But at the end of the day it's the stocks that are still on the low, you run the risk of underperforming, and then you don't have the market and people excited about them. But then again, you see how quickly feelings and ideas can change. But all in all, though, I really think buy the value names when they go lower, or buy these names if they've already moved up. Again, I love Papa John's, baby. Great example. I love Papa John's, but I liked it at $30, bro. I want to be buying it 40-50% higher. Oh, man, I forgot, bro. Excuse me. Here, hold on. Yes, there you go. How are you, brothers? Yes, any other questions? Oh, you didn't see I was showing you all these charts. You should have told me. Yeah, I was going through. I was saying pizza. Again, Dollar Tree, like, it's... Like I'm saying, man, just like not too long ago, it was at $60. So I'm just, if you didn't like it then, doesn't mean it's a bad name. You could buy the recovery, but patience, worst case, you're going to watch it go up and be like, damn, I could have had that. You know what I'm saying? But you've watched that with Bitcoin your whole life. So why are you stressing? You get what I'm saying? It's not, you'll live, you'll be fine, but you'll find another one. You just got to be patient. Frequency soundboard? No, I did not. I don't use a sound. What? A frequency soundboard. But yeah, I'm not familiar with the hertz. I just vibe. I've been vibing away. Is it raining? Dude. Yeah, it's actually raining. And that's why I hear raindrops, but it's not the Zen music. Walgreens is bought out, so you're just gonna lose already. You know, well, actually, you'll get debt that could convert, but yeah, there's no play there. $13, 14, I think, is the max of what you're gonna receive in equivalence. There could be upside because it's gonna turn into some company. I remember I read the details, but other than that, I don't think that's in play. Again, Pepsi, Target, UPS. These are names that are still like near the fucking bottom. Oh, excuse me. And they're pinned. That's why I'm like, man, these are great value names with big people behind them, everything. And you know and use them, big brands. I think Pepsi's probably the highest quality. Again, UPS. Which ones? I'm missing some other. Hershey's came back down. You know that? Hershey's is another one. I feel like we haven't talked. You could have got it even lower at 140. It kind of reminds me of Nike, where it's like it's still like 20% off of those lows, but yeah, man, Hershey's, that's a great one. So again, there's a lot of different names out there that it's not as many as it was a month or two ago, but I would look for that, and until then you wait. What's wrong? Again, I've only made 2 moves this whole year. Again, all right here, all within this window, and that's it. Chilling. It's been good. Everything's fine, and you'll get good deals. If you miss the window, wait. I wouldn't force yourself into a bad position. Again, like I remember. Do you guys remember? Cut the music. Cut the damn. Do you remember what I told you? Do you remember what I told you guys a month or two ago? Okay? Nah, do you remember what I told you? And I say you are either going to hate me or love me. Some of you are going to pick a way to get mad either way. What did I tell you? I said choose your frustration. You remember that? At the bottom, I told you that. Even a month in, a week in, I kept reminding you that. I said choose your frustration. That's it. Because again, you're either going to buy that. If you could you could keep forcing the highs, and yeah, you'll make a little bit. Comes down, you're going to get mad. If it comes down, you're going to love it. Don't blame me. If you decide early, you're going to be better off. And you're going to be good to go, and you don't have to insist in this mental instability, and you only will if you're like really gambling. But like I'm telling you, long term, we've only made 2 moves, and we're leading the damn world, still outperforming. You're doing great, building up the cash, still get the yield. You're just going in between extremes. I want the value names, and that's why I said this summer, next 3 months, it could be very good, but I'm fine with missing out, because again, my case, missing out, it's still going to work. And again, you should decide what you're going to be more frustrated with. Are you going to be more frustrated buying Dollar Tree and being down on it 40% 3 months from now? Or are you going to be more mad if it goes up another 40%? You have to really weigh and prioritize that. And if you could do that and decide, you'll be fine. But again, I told this a month or 2 ago, and it had way more potency back then, because the earlier you make this decision, the more likely it's going to profit you. So yeah, you could play. Do you guys hear that? The weather. Bibi. So yeah. $155 on CoreWeave, 200. I turned my $40 into 4,000. That was just my last play. I made a lot more on it. I was gonna make another play on it, but I'm just going with the flow, literally. So I don't have any expectations. It could go 200, 300. It could go to $2. I'm gonna just go with the vibe of it, but I want good premiums and a good momentum and a good market. But I think as long as that gets attention, there's a lot of potential for movement. So just play accordingly. But yeah, I mean, I got my licks in on that one very well. 10,000% realized. No exaggeration. So yeah, but then I had another play today I was gonna grab, but like I said, choose your frustration. Even down to that one too. Yes. And then our dividends, they've almost grown 10% on the year, but other than that, I told you a week or two ago, I had the temptation to full port into Whirlpool, but we gotta wait. I need more clarity on their dividend. I like Pfizer. Do you guys want me to tell you something today? I'll tell you. I would buy Pfizer right now, but we need. I'm gonna tell you when we're gonna buy Pfizer. They need to have either a really good earnings shift or a really good drug or acquisition, and I don't know if they're gonna do that, but they're gonna turn on their buyback soon. So it's been about 2 or 3 years since they've actually done buybacks. And they already announced, it's in the filings, they said no buybacks for all of 2025. So unfortunately, unless you want to go for the 7% yield, they're above their payout ratio already, so I don't know if that dividend is guaranteed. Then yeah, you can. But other than that, I think towards end of the year, beginning of the year, that'll be the time to average. But I'm watching out for it. They got CGen, but they could buy some smaller ones, or again, they need something good. Remember, they have a fuck ton of money. A lot of people always fail to realize that with some of these names, like, because again, Hims just bought a company, and they didn't announce how much they're paying for it, but Hims only has $400 million on their balance sheet. I think Pfizer has like $24 billion or something, and that's after buying. But yeah, but then again, they also have. They're paying more for their dividend than they're profiting right now. So other than that, though, I do think that this one would be a decent one to watch, but maybe towards the end of the year. Does Pfizer have an AI budget? I don't know. I'm not familiar. The 40 to 40K was CoreWeave. Yeah, I hit a bunch of them. Bro, I hit a bunch of 1,000%ers on CoreWeave. I made a lot of money on CoreWeave. We got in from the first earnings. I said it on stream. I said, this reminds me of ARM. ARM, I made the video on 2 standard deviations. ARM was we hit ARM right here. I said, that's what it reminds me of. And it really fucking did it. So yeah, small plays, and then we just kept getting greedy with it. And then I held one more. I got kind of over it last week. I threw a couple of out, made some free, and then some expired worthless, and then I had this one that was in the money, and I was happy with 10,000%. I wanted 10,000%. So yeah, it was cool. You said you always wait for IPOs to make a play. Yeah, CoreWeave, I didn't play it on the IPO. That was like it was the IPO breakout. So I actually didn't play it on IPO day. It like moved around, and it was like near the earnings, and then it was breaking from the high. Again, I think the first stream alert, it was saying IPO breakout. So it's one thing to play on like IPO day, but I was talking about this. It IPO'd in March, and then what, 2-3 months later, it gets back to the crazy price. That's when it usually goes nuts. And then we got a shit ton of calls all around. At one point, I had 100 CoreWeave calls, to put it into perspective. So I did make them free at a couple 100%, but I just whittled them down one. But then I kept going greedy and going crazy on them. So yeah, fun time. But other than that, that is kind of an OG play. OG strategy of the IPO breakout. Indeed. But yes, any other ones? We could talk more long term all day. I need to pull out the list of the. I had another year-to-date list, but oh yeah, I can pull it on my chart on the thing that tells me the stocks up and down every day. And it tells me the year-to-date. Not in order though. But yeah. Let's see. I don't know. I like some of every company I've mentioned. Am I missing any? Because, like, you guys know, like, the main list so far. The main list is, like, UPS, Whirlpool, Pfizer, Target, Pepsi, Hershey's. What other, like, big blue chip names are really low in quality? Nike. It sucks. Nike and Starbucks are in a weird position. Because they're both, like, 20% off of, like, the low. You know, but then they're still in the position where they're struggling. Does that make sense? So they still have all of the victim traits, but then they don't have the victim price. That's what I don't like. Yeah, UNH even, or any of the Humanas and healthcare plays. That's if you've really got the balls, but that might be, again, anything medicine, it just might be later. I don't know, General Mills, let's see. Could be decent. I think it's up on the year. That's General Motors. GIS, yeah. Actually, that looks great, to be honest. I'll have to look into it fundamentally, but yeah. Disney's already up. We're up on Disney. Again, Whirlpool, that's what we're still down on. Anything, again, I think those are the main ones that I'm really down on. Kraft Heinz, but I love the brand, man, but they just never move. Again, for years, they've kind of been going through a lot. I know Buffett's really liked them. You got to pull this chart out as deceptive. Yeah, I've literally watched this stock for a decade do nothing, and it's a great brand, but I can't get behind it, to be honest. I think you could go better. I think better quality. That's why that's why, like, quite frankly, General Mills is good, but I think Pepsi is a way better brand, and I think you could do like Pepsi. You have way more staying power than both General Mills and Kraft. Even cheese. I think Pepsi beats cheese. American cheese, I guess. So yeah, but that's why, like, I really like Pepsi. It sucks because, like, Pepsi, I want it, but Pepsi pays the same as cash. That's it. Like, the only question is, am I gonna regret? Pepsi, you get paid 4.5%. That's it. You could either gain or lose on it. It's gonna move more than the dollar, but yeah, that's it. But I'm like, I like my cash. I would like more Pepsi if it goes down, but then if it goes up, I really wouldn't mind. But yeah, it's a good brand. But then we already have Coca-Cola, so I can't get too mad. I like J&J a lot. I would give me toothpaste, bro. J&J, P&G, yeah, those, we need a drop in those. J&J still has the baby cancer risk, though. That's the only problem, and the bankruptcy stuff. That's why I think Procter & Gamble way better, but that's a little high. Again, Walmart, if that came down, but look at the stick. You don't touch those. Yeah, Merck for healthcare. That's one. I was looking at that recently. There's another medicine one. Stanley Black & Decker. I've seen them. They're decent. There's something. They had news recently. I remember they dropped there, but that one might be a little bit more if it has the risk of turning into a value trap. You just got to watch out. But it's a good brand and tools. I'm down. Estee Lauder, but that popped already. So, again, kind of like Nike. It has all the victim traits, but you're going to pay the premium. Clorox, somebody brought that one up. Like I'm saying, like all of these, I think they're great, but I really think Pepsi is the superior brand in all of this. I think these all have brands. They all compete with Pepsi in a weird way. You know that. Clorox has like fucking, they have what? Ranch. And then they also own Burt's Bees. And then, you know what I'm saying? Like, oh, you'd be, again, we're talking fucking Doritos, bro. Pepsi is Doritos. So, yeah. Yum Brands is Pepsi, but they just spun it off. You know that? So, you know Pepsi is KFC and, who else? Pizza Hut? You know that? They just spun it off years ago. That's what Yum Brands is. Yum Brands used to be owned by Pepsi, and Pepsi spun it off. Pepsi is Gatorade. That's what I'm saying, bro. Like, these are brands that, it's a whole conglomerate. You know, like General Mills is great. They got good cereal. They got some good brands, but like the Pepsi brands are great. They're just going through a lot right now. So yeah. Oh, do they do the canned Starbucks ones? Yeah, Taco Bell is Yum Brands, but Yum Brands spun off from Pepsi. So back in the day, Yum Brands was owned by Pepsi. And then as they got big and grew, they had to spin it off. Yeah, Cheetos, Gatorade, Sun Chips. So I like it just talking about it, bro. Every single time. It's literally equivalent to cash. But the only difference, it's like, do you believe in the dollar or Pepsi? It's actually they're matched. It's the fucking same thing. Because that's it. It's like, if it comes down, it's going to yield more. But right now, it pays out like the dollar. There's no real risk of the payout ratio going crazy. And then again, it's like your dollar may not appreciate unless things go down a lot and you can buy more. But if Pepsi goes up a lot, you get the same yield as the bond, the dollar, cash. And then it goes up. But yeah, big fan. I don't know, man. Mountain Dew Baja Blast. I want to try the Mountain Dew one from Pizza from Little Caesars, because that's the correct company. Yeah. Yeah, Dow Chemicals. People have brought that one up. It's a little bit different. Again, all of you know Dow Chemicals, but you don't. That's what, like, unless you're like actually familiar with it too, like really. But it's an interesting one. Pizza. Well, on that note, Chad, final questions. Final question. Otherwise, we wrap it up. What do we got, baby? But Chad, enjoy your evening. I love you all. Shout out, the long term will prevail, man. We got years. God willing, no finish line. Let's see where we're at by day 365. But lock in, baby. Lock in. It's game time. Pony, no pony. Regen, maybe, but that's a different, that's the biotechs. Eventually, we'll get a good biotech or healthcare. Eyes out, but not yet. At least in my opinion. 10% minimum, baby. Amen. Campbell's could be a decent one, but I think Pepsi wins all of them. Pepsi is the Mewtwo of all of these brands. He's the Pikachu, bro. You know what I'm saying? Like, my next Waymo is more enjoyable. They don't have them locally, bro. So we'll see. But Chad, I love you all. Have a very, very blessed evening. Go to sleep blessed, baby. Control the thoughts, man. That's it. You command it through the surrender. Just direct the thoughts in the right place, baby. And rest up, man. Be blessed, okay? Be blessed. Little by little, wake up early. Seriously, wake up early tomorrow. If you don't wake up early tomorrow, why not? Just wake up early tomorrow. It costs you nothing. Wow. I love you, Chad. God bless you. Have a wonderful evening. Finger to the sky. Shout out the long term. And hard on.